Most crypto investors think they have everything they need to succeed in a bull market. They had their Twitter followers, they had their YouTubers, they had their newsletters, they're consuming everything, but yet you are so busy trying to figure out your life and your career, maybe your business, that crypto falls by the wayside, and 99% of the time you end up round tripping at another bull market because you're too busy and you don't know when to sell. The market goes up, it goes down, and we're back to square one again. The reality is what you need to succeed is a personalized strategy, a 10-step process that I've created over the last 8 years to help me make millions of dollars and also help all of my clients do the exact same thing. There is no way you can achieve a multi-million dollar crypto portfolio while doing everything else and just rely on someone online telling you exactly what to do. You cannot rely on me, you can't rely on anyone else. You need to actually have a plan in place to help you make sure you're logically taking the right steps to crush this bull market. So in today's video, I'm going to be going through my 3-part series on how to actually build a strategy to crush this bull market. Now, I didn't have a strategy when I first started back in 2017, failed the first bull market, and it wasn't until the second bull market back in 2021, my bull market that I was in, that I made life-changing amounts of money from investing early in the metaverse and getting out 20, 30, 40x returns because of this exact process I'm going to share with you today. And you can walk away with a strategy to crush this bull market over the next 12 and 24 months. So let's crack into it. Firstly, number one is what actually is and what creates a foundational strategy for a bull market, right? So what in terms of a strategy that you can push together, to start with. And first of all, I sit down with clients and they don't even know what they have, right? They've got crap everywhere. They're not tracking it. They have different assets. They have different wallets. They don't have it all on a spreadsheet. It's kind of all over the shop. You really need to understand your portfolio right now and the portfolio structure to get that right. One of the biggest mistakes I see people make is that they over-index on a certain asset. They might love XRP, for example. They might like Cardano. They might like whatever, Ethereum. And you over-index on a certain asset and you have too large of a percentage in your portfolio to actually return anything meaningful. Because if you have something that underperforms and you have too much percentage of it, well, then you're going to lose over time, right? So portfolio allocation is a big one. I like to look at it as a balanced approach. I like to have at least 50% of my portfolio in Bitcoin. The reason being is a lot of people think that you need to buy a bunch of altcoins to make all these returns. But if you look over the returns over the last 12, 18 months, very little has actually outperformed Bitcoin. Bitcoin's up over 130% over the last 12 months. And a lot of the altcoins have retraced over the last 3 or 4 months. If you've been over-indexing those meme coins, DeFi, whatever, then your portfolio is going to be down unless you have a large chunk of Bitcoin. This is very much overlooked. Twitter sentiment right now is really, really poor because so many people are over-indexed on altcoins. So portfolio structure is really, really important. Look at having at least 50% in BTC. Then next-gen layer ones are my favorites, and I continue to believe they're going to outperform Solana, Sui, Ethereum, for example, and then splitting some risk across the other assets, which I can talk about very soon. But that is really, really important, right? Have those lower cap as a smaller percentage and have some bigger caps as a larger percentage. I know that's very basic, but some people try and overcomplicate it and end up with a bunch of crap that they do not need, and then it ends up underperforming what you could just buy is Bitcoin and be up 130%, right? So that's number one. The other part about portfolio breakdown is having the risk to reward. So a lot of people ask me, well, why should I own one asset over the other? For me, it comes down to the reward and risk mechanism. I'm looking for outsized returns with least risk in my bigger holdings, but also in my lower holdings, in my higher risk assets, I'm looking for even bigger returns for even higher risk, but that is a much smaller percentage of my portfolio. I might put only 1% or 0.5% in a meme coin, for example, rather than putting 15, 20% like some people do. Because if you have that much, that's where you're going to go and get yourself into trouble. Now, a lot of other people I know, especially larger holders that I work with, larger investors, they might have 70, 80% Bitcoin, or they might have 50 or 60% ETH, for example. That's okay. I mean, I've been buying ETH since $80. I'm super, super bullish. But if you've got 100 ETH in your portfolio, not much else, you've actually missed out on a lot of returns because of ETH hasn't really been in the limelight. But if you actually adjusted and diversified and put some into Solana, into Sui, for example, and offset some of that risk where the attention's been outside of Ethereum or other layer ones, then you're going to start to get those returns. So diversification and offsetting is really, really important. Part two of, or question number two, I guess, of this strategy in sort of that foundational piece is your goals. I know a lot of people that accidentally sold the top because they had a goal of buying a house, and they did that because their wife was onto them and they needed to buy a house, so they did that, and then looking back, they actually sold in the top, right? That is an example of someone that actually has a reason to sell their crypto and do something with it. In the last bull market, I sold a lot of my crypto to build Collective Shift, my business, and it gave me a really good reason and logical reason to actually go and get that money outside of crypto. Because if you don't have a goal, it's very, very hard to actually sell, because there's never a reason to sell your crypto. You're like, well, what else am I going to buy? I may as well just hold and stay within crypto. But we know that crypto runs in cycles, and we're going to go down, and you're going to have to wait another 2 or 3 years as we accumulate and go again. So understand what those goals are, whether it's investment properties, whether it's, credit cards, whether it's, a diversification. So for me, my goal this cycle is to be able to diversify and buy property, right? Bitcoin and property are the two assets I believe are going to continue to be the best performing across any sector. And that's why it's really important to think about, not only wealth creation, but wealth preservation, right? And in terms of like creating your goals, there's some other things you can think about around like, what are you here for? Are you here for the long term? Are you here for the short term? Are you like, do you have a lot of time? Do you want to stay all within crypto? Some other things as well as like time frames, and also what you want to do with the capital. Like you could probably put some of that money into stable coins, earn a yield. Like let's say you wanted to try and get to $1 million of stable coins and earn 8%. So you're earning 80 grand a year through stable coins in a bear market. Perfect, right? That's great. But make sure you try and come up with realistic goals. Another problem I see people make is they might have like $250,000 in their portfolio, and they're trying to make like 25 million this cycle. Like that's very, very unrealistic. And if you have unrealistic goals, then you're not going to be able to actually achieve those goals. And then again, you're going to fail them. So understand those goals, and then also the timeframes and the risk to ensure that you're sort of getting there is super, super important. Now, the last part of this sort of an initial foundation is setting your time horizon. So really understanding your time horizon is a big one. Back to like the pieces I was talking about here, like some people, underestimate what they can achieve in the long term, but overestimate what they can achieve in the short term, right? So think long term, zoom out. I know a lot of people are concerned about where we are in the cycle right now. If you zoom out and look at Bitcoin chart over the last 18 months, it's been super, super solid. We're just in another consolidation phase. If you're in your retiree phase, maybe you're in your SMSF, your time frame is going to be a little bit shorter, and that's going to adjust your risk. It's going to adjust your goals. If you're younger, maybe in your 20s, in your 30s, maybe you're just, you're starting to think about having kids, or maybe you've got a mortgage, whatever, then your time frame is going to be a little bit longer. Maybe you can add a little bit more risk. Do you have dividends coming in from your business? Do you have some profits from, different investments, or maybe your salary? Whatever it is, understanding those timeframes and how much money you can afford to invest and are willing to lose can give you a really good sort of understanding there. So that's like part one of the foundations. Really, again, making sure you've got your portfolio structure and understanding the allocations and your target allocations is important. Your goals, where do you want to get to? And then also your time horizon, when do you want to get it in? And try not to put too many parameters around your time horizon. I've seen people make the mistake of having to try and earn X amount of dollars from their portfolio by Y date. And if they don't achieve that, then they start to make poor decisions trying to get there faster. They might trade into altcoins, and then they're chasing these different sectors, trying to achieve their goals in this time frame. The market doesn't give a shit about you. You can have time frames and dates that you want to, you need to do things by, but that's great. Have those, but the market doesn't care. So don't force things to try and get to a certain position without the market actually allowing you to do that. Okay, so part two is how to actually pick the right investment. So, how do you even know which assets to hold? Which ones are going to get you to that, that $1 million portfolio plus whatever. First of all, it's risk appetite. So risk appetite is, you're already in crypto, right? So your risk appetite's probably already quite high. But you also need to make a bit of an assessment on how much risk do you want to take? And we've seen over the last little while that lower cap assets and altcoins have been flushed out, right? They've been impacted due to the amount of altcoins there are in the space. Pump.fund's obviously been really massive. Solana, everything that's happening there. There's been a bunch of meme coins being created by celebrities and presidents and all this sort of stuff. Super, super high risk stuff. Now that's okay if you want to invest in those, but do you have the time to manage those? Do you have time to know when to get in and out? One of our platinum members recently made $150K off the Trump launch, but he was there. He does a lot in crypto. He was there to buy and sell pretty much within the same day. I know a lot of you have family, you have businesses, you have stuff going on. You don't have that time. So getting those super, super high risk assets is probably not a good play, right? If you do have a lot of time, go for it. But risk appetite and riskability is actually is an overlooked thing. You can't just go and buy a meme coin now and hope for the best and hold and just think it's going to go up. I recently reallocated, I was into WIF and PopCap, recently sold those off due to where we are in the cycle, but also right now the market is not rewarding those super high risk assets. Yes, that's going to turn around at some point in the future, but understanding your risk allocation is really, really important. The other part of risk as well is when you have a pullback and when you have a correction, if you feel sick in the stomach, if you're constantly looking at your portfolio and you're worried, maybe you've over allocated into altcoins as well. So that's really, really important. Next part of this is your short and long-term strategy. So, do you understand where you're at in terms of, where do you want to build your stack long term, and where and how you're trying to optimize in the short term? So for me, long term, I'm stacking as much Bitcoin as I can. For the last 12 months, I've been using any profits or off the balance sheet from my business or any additional income that I've had to buy Bitcoin, because I believe that has had the best risk to reward profile for the last 12 months while we're in those macro conditions. But also in the short term, I'm still allocated a little bit to some high risk alts. I recently added another layer 1 chain to my portfolio as another short term play, as a position that I want to use that money and hopefully over collateralize and then move that into my Bitcoin stack. Super long term, building out my Bitcoin and property, right? Splitting the portfolios and strategies is actually, a really timely thing, because then it can allow you to just, give you a bit more headspace and clearer thinking as to what you can do short and long term. If you build it all together, especially if you're trading, it can just completely annihilate your portfolio, and then you start over trading and start doing a bunch of different stuff. So you can have different strategies. You can have a short term and long term. That's absolutely okay. The last component here of the sort of second area is understanding, some of those shit coins or some of the crap you've held in your portfolio for a little while. So, the market is moving at an ever rapid rate, and you really need to understand what assets you are willing to keep and which assets you're willing to get rid of. And we've put together an awesome checklist here, that you can sort of go through. And these are just like a checklist to help you sort of understand and evaluate whether or not a project is worthwhile getting rid of. One of the things that I tend to look at in big market flushes like we've had recently is what assets are bouncing the hardest, because that gives you a good indication of what the market is, rewarding and which one it has the most confidence in. But then also you need to be looking on chain, seeing user adoption. You need to see are they still building on their roadmap? How is it going in terms of sentiment? Sentiment, I think, has gotten a lot stronger in terms of profiling an asset right now in the market. AI was obviously really big. Meme coins were really big last year. Now at the moment, it's kind of still AI, a little less meme coin, more like next gen layer ones. You've got a little bit of other stuff going on, but right now the sentiment is pretty bleak. So you need to be looking at, again, what sectors are bouncing the hardest, what things are coming up. Also, announcements from projects. We've got a lot of token releases coming out. So token unlocks coming out for a lot of the projects right now. So that is putting a little bit of pressure on the market. But know that, if your project is down, you don't have to hold it hoping it's going to come up. Burying your head in the sand and just hoping for the best isn't a strategy like I always talk about. But there also is a lot of weight put in being patient and waiting for the market to return. Because right now for altcoins, no, it isn't very optimal. But you need to understand there's a fine line between being patient and waiting for a project to come back versus being in denial and just hoping for the best, knowing that project probably will never come back, if that makes sense. So that's sort of part 2 around picking your right investments, understanding what ones to get rid of, separating your sort of short and long-term strategy, and then also understanding which assets to select, right? Now, the last part of your strategy is around when to buy, when to sell, how to store, those sorts of things. So first of all, this has become less relevant, I think, more recently. Obviously, this was a really big one, when FTX was around exchanges going under and you losing your money. Storage is a really big one. I keep mine on a hardware wallet. There's a lot of different types of wallets. You've got cold wallets, you've got hot wallets, you've got exchange wallets, desktop wallets. I would really recommend either one, a cold wallet, putting it into a Ledger or Trezor, or if you have it on an exchange, make sure you keep a really strong password and using 2-factor authentication, okay? The other part of this is if you have it in a trust or you want to pass it down to your wife or your kids if something was to happen to you, you can also use things like multi-sig wallets and things like that, which are pretty common. There's some different options out there as well, but I'd really recommend making sure you have the right storage for yourself. Do you need access really quickly? Maybe an exchange wallet's going to be easier. Do you just set and forget? You can send it to your cold wallet. Maybe that's a little bit better for you as well. All right. Next part of this is your buy strategy. So I always say accumulating during periods like now is really, really solid, right? Over the last 12 months, I've been accumulating as much Bitcoin as I can. I've been accumulating for 8 years, but some of the best buying I did was during the 2018, 2019 bear market when basically everyone gave up And I basically switched my whole salary to be paid in Bitcoin from my business. And then any profits, I was buying Bitcoin and Ethereum as well, right? You can accumulate some really great underlying assets at those points. Now, those days have probably been and gone. What are you doing right now? Do you have additional income? What are you doing with your dividends from your business? How are you thinking about like actually investing into the market? I always say that some people like to, like, let's say they get an extra 50 grand they want to put in the market. They'll be like, Ben, what altcoin is the best to buy right now? Because they're always thinking, how can they get the biggest return, right? But they forget about the risks. Bitcoin has outperformed 98% of the market over the last 12 months. If you include the retracements, probably 99%. I always make sure you go back to your portfolio allocation and continue to build upon the assets that you already have. You don't need to go and add like crazy new stuff to try and get this outsized returns, because the reality is it's probably done the opposite over the last 12 months. So continue to buy good assets. Right now, I'm just sticking really to the top 10, top 15, top 20. I haven't added many new altcoins. I think I added one again last week, but everything else I haven't really accumulated. I've already bought a lot as previous times, and I've been accumulating the top 20. Reason being is the macro conditions are not looking like they're that favorable for altcoins right now, especially the lower cap altcoins. Okay, that will change in the future, and then I'll change my strategy and I'll update it. But that is your buy strategy. Where are you putting that money in? Are you dollar cost averaging? Are you lump summing? How are you doing it? When are you putting it in? Those are the things you really want to dial in. Now, the sell strategy, again, is probably one of the most important parts of this, and that's why like this is, heading to the back end of this strategy, you really want to make sure you dial in. There is different ways you can create sell strategies, right? You've got percentage-based sell strategy where you sell a percentage of your stack at different pricing points. By the way, these are just examples. This is just resources in our platform as an example to help. But you've got percentages of different price targets. You've got time-based strategy, so based at different timing of the market, you can sell pieces of your stack at different points of the year. You've got periods. You've also got dollar cost averaging out. So I like this. I kind of use a mix of dollar cost averaging out and also sell points. So I'll like DCA out based on price targets rather than time targets. I think time targets are a little bit like invalid just because the market changes, and my expectations of this bull market has kind of been pushed back a little bit based on the crypto advisory team around Trump has sort of pushed back their announcements till middle of the year. Also, the rates are still high. We're still in QT, things like that. So timing, I think, is invalidated in my opinion, but price targets and then selling incremental points out of those price targets is something I like to do. You've also got like amount of unrealized profit or loss. I think this is a bit better for like high risk coins, so you can you can liquidate X% of your holdings based on percentage growth. I think this is much better for those high risk assets, as I said. But yeah, looking at not only like when you're going to sell, but what are you going to sell into? Like, are you selling these into stable coins, into fiat, into another currency? You do need to worry about, be aware of tax and things like that. But then you can also automate it. So you can sell targets and profit taking targets on your exchanges and things like that. So sell strategy is really important. Another most important part though of this is ensuring you have up-to-date data, not just like creating a sell strategy and then just forgetting about it, because the market moves, and that's what we do at Collective Shift, is really try and give you up-to-date insights and data on like what's going on, so you can really optimize and get out of your portfolio at the right time. Now, last but not least, in terms of your execution, is your tax and structure. Again, another big one that a lot of people overlook, especially in Australia. You can pay a lot of tax, so make sure you have the right tax and structure strategies, whether it's be trusts, whether it be company structures. Are you investing off your balance sheet, your personal investments? You've obviously got the 50% capital gains discount after 12 months. Make sure you speak to an expert on that and really get some really good clarity and advice, because otherwise you can really end up paying the tax man a bunch of money. So that's really the 10-step process that I've used. The reason I've called this is like how to create $1 million portfolio is because to make more than $1 million in this space, or multiple millions, you need to have a strategy. Yes, you might be able to get lucky on a few alts here and there, and you might make a little bit of money, but more often than not, you will fail by trying to create a bunch of money really, really quickly. Think long term, have a strategy. And if you need some help, we can also help you on our one-on-ones. You can book in a free schedule for a strategy call. One of our team can jump on, walk you through this process. We have our 10-step process, which I just spoke through, and we can help you actually figure out a plan of attack to get you from where you are now to get to those multiple millions of dollars in profit, hopefully. So hopefully that's been helpful. Let me know in the comments below what you think, if there's anything that I missed out. But keep evolving your strategy, keep dialing in, adapt, don't bury your head in the sand, follow a process, write it out. I do have that 10-step strategy that I just mentioned in a PDF, so you can check that out here or on our website. We have that full PDF, which I just went through, and that'll help you absolutely dial in and crush this bull market. Thank you so much for listening. I would love you to leave me a subscribe if you enjoyed the video, and I'll see you on the next one.